Welcome, and thank you for joining me. I'm Jayden Doyé, CPA and founder of Prestige Accounting and Consulting. Today's session is a focused update on several federal tax and regulatory changes announced in late 2025 and what they mean for you as a law firm owner. Some of these updates affect cash flow, others affect compliance and deadlines, and a few reveal how the IRS itself is operating behind the scenes. The goal here is simple. Help you understand what's changing, what's staying the same for now, and how to prepare before the next filing season. As of September 30th, 2025, the U.S. Treasury stopped issuing paper checks for most federal payments. That includes Social Security, veterans benefits, and other federal benefits. Direct deposit is now required. Most people won't need to do anything because they already receive payments electronically. But if you or someone connected to your firm still receives a paper check, this needs immediate attention. Enrollment can be completed at godirect.gov or by calling the Treasury's Electronic Payment Solution Center. This change is about reducing fraud and delays, but it also means paper is no longer a backup option. Despite the One Big Beautiful Bill Act, the IRS has confirmed that there are no changes to information returns or withholding tables for tax year 2025. Forms W-2, Forms 1099, Form 941, and existing payroll processes all remain unchanged for now. The IRS intentionally delayed implementation to avoid disrupting the filing season and to give businesses time to prepare. The key takeaway is stability in the short term, but preparation for 2026 when these changes are expected to take effect. In July of 2025, a new law expanded the IRS's authority to grant filing relief. Previously, deadline extensions were limited to federally declared disasters. Now, the IRS can also postpone deadlines for state-declared disasters once requested by a governor. The automatic extension period has also increased from 60 days to 120 days. For law firm owners, this provides more flexibility during regional emergencies and reduces exposure to penalties when operations are disrupted. Several energy-related tax credits are scheduled to expire at the end of 2025 or in mid-2026. Clean vehicle credits under Sections 25E, 30D, and 45W expire after September 30th, 2025. Here's the critical detail. A vehicle is considered acquired when a binding contract is signed and payment is made, not when the vehicle is delivered. Missing that timing window can mean losing the credit entirely, even if delivery happens later. In early 2025, the IRS terminated more than 7,000 probationary employees. However, the agency failed to properly document performance issues, leading to court intervention. As a result, all affected employees were reinstated. This matters because it highlights ongoing staffing instability inside the IRS, which can affect response times, consistency, and enforcement. The practical takeaway is simple. IRS systems and processes are not flawless, and staying proactive is more important than ever. Here's what you should be doing now. Confirm all federal payments are set up electronically. Begin preparing for OBBBA changes expected in 2026. Communicate early about expiring energy credits and acquisition deadlines. And create a disaster response filing plan in case relief rules apply. Proactive planning here protects both your firm's time and cash flow. If you want help understanding how these changes apply to your firm, or you want a clear plan for compliance and timing, this is where we can help. Book a strategy consultation with our team at Prestige Accounting and Consulting. We'll focus on what actually matters for your practice and help you stay ahead instead of reacting later.